Shifting focus to the West African market, Ghana has tabled its 2025 budget. The West African nation eyes a fiscal deficit of 4.1% of GDP this year, from a deficit of 5.2% previously. But the path to fiscal consolidation has been complicated by its growing debt pile. In response, Finance Minister Cassiel Foroson has announced significant spending cuts, shock therapy to help reform the economy. Leeuwner Esterhuysen, economist at Oxford Economics Africa, joins us for a closer look at what has been tabled. Leeuwner, thanks so much for your time this afternoon. And I guess let's just start there. What is the significance of this budget, especially as it comes under President Mahama's second term?
Thanks for having me. Yeah, so as you mentioned, it is the NDC's first budget since taking power, and the new leadership parties, obviously, they are faced with a lot of fiscal issues and difficulties that the exiting NPP government left them. So that is why this budget is so important, is how it's kind of laying the roadmap for the next 4 years, explaining how the NDC plans to address the fiscal situation that Ghana is currently in.
And let's talk about how they actually plan to deal with those problems. How does the new administration plan to then restore the fiscal sustainability of the country?
So the party is kind of toeing the line with what they campaigned on. So there are several taxes that they are looking to cut, like the e-levy that the NPP introduced in mid-2022, and there's a betting tax on betting winnings of 10% as well that they're looking to remove. So there's a lot on the revenue side that would kind of state that, you know, that the focus isn't so heavily on the income side, but they're still eyeing a 20% increase in revenues this year, and they'll increase the taxes on gold mining companies. So there's some expectation that that's going to increase some revenue, but at the same time they're looking to cut expenses as well, like you alluded to earlier, by reducing ministries and operating like a more efficient government.
And don't you think they'll perhaps face some pushback from the private sector, considering that they are, you know, alleviating pressure when it comes to cutting the taxes for consumers and the everyday Ghanaian, but that 20% hike for the gold miners, you know, they might just face some pushback from the private sector?
So the tax increase on gold companies, that's increasing from 1.5% to 3%.
Okay.
So that they're looking to increase overall revenue for the budget by 20%. So in essence, that's a good point. There might be some pushback, but I think the bigger picture is alleviating the pressure that consumers are under, and broadening the tax base by that outcome will lead to a better environment to operate in for businesses as well. If there's more, if the purchasing power of the city improves, and if consumers can spend more, then I think the net impact of that will actually lead to the private sector's benefit.
Now, the budget is also coinciding with the implementation of the 24-hour economy policy. How is that expected to impact Ghana's economic growth and development, Leeuwner?
So the new party they said that they'll make a presentation on that 24-hour economy to Parliament in due course, but in essence they want to split up the economy into 3 8-hour shifts. And this will boost, according to the NDC, this will boost productivity and obviously lead to higher economic growth. It's quite a interesting idea. Whether or not that will yield a significant outcome is yet to be seen. I think there's a lot of innovation, if I could say, and I guess breaking the norm from what the NPP did in the previous administration in this budget. So the outcomes of that will be quite important.
Leeuwner, do you think that perhaps the new administration is under pressure, considering what the old administration left them with?
No, I think they definitely are, because that's obviously, those are the fires that they need to put out. And a lot of this budget also alluded to the debt repayments that's looming. There's the vast majority of domestic and foreign debt repayments are falling in 2027 and 2028. And at present, Ghana remains locked out of international capital markets, so they're kind of relying on treasury bills for financing. So I think what's a positive sign is that the new finance minister is seeing these potential hurdles and roadblocks up ahead, and that they are trying to proactively, course correct on their way there, because they still have IMF support until mid next year. So it's only the real pressures that this administration, or the fiscal administration at least, will feel is only likely, in the last 2 years of this presidential cycle.
And talk to me further about that IMF program and the role it plays in Ghana's fiscal consolidation efforts.
So the President Mahama has previously said that he feels that the program in its current form focuses a little bit too much on revenue and not enough on expenditure. And this is, the sentiment is reflected in the new budget as well. And at the same time, the new president has alluded to renegotiating some of the terms and some of the targets in the program, but he personally has not signaled that he wants to extend the program, because he feels that it restricts fiscal policy making in Ghana. So positively, both parties remain committed to the program. Ghana remains committed. There's the IMF, there's a staff mission in April, so next month, to assess the situation again. There was one shortly after the presidential presidential elections as well. So it's the dynamic there is still strong and positive, but it's not likely that the current government will extend the program or look to extend it beyond 2026, when it's supposed to lapse.
Leeuwner, thanks so much for your time and just sharing those insights and unpacking what the budget in Ghana was all about. That was Leeuwner Esterhuysen, economist at Oxford Economics Africa.